All right, it is noontime. Welcome to the webinar for busy lawyers. We are so glad that you are joining us. My name is Laura. I'm one of the law practice advisors at Lawyers Concerned for Lawyers. With me also on the panel is my senior law practice management advisor, Luz Karen, who will be helping moderate the questions. And October is Cybersecurity Month, so we are so excited to be able to come to you with a webinar about cyber risk insurance. I know this has been on a lot of people's minds, and we are so glad that our guest expert today could come and speak with us about it. I will let you know that we're going to have Terry present, and then we'll have questions afterwards, so please think and put your questions in the Q&A. We'll get it afterwards. To introduce our esteemed speaker today, Terence Welsh, or Terry, is the President and Chief Operating Officer of the Mass Bar Association and Insurance Agency. He is a frequent presenter to bar associations, law schools, and MCLE, as well as other interested groups on Lawyers Professional Liability Insurance. Terry has been in the insurance industry for over 40 years and has held senior management positions in several large national insurance companies. The Lawyers Malpractice Program for the Mass Bar Association is the largest in Massachusetts. Terry, we are so glad to have your expertise on this, and I will turn it over to you for some information and practical tips about cyber risk insurance.
That's great. Thank you.
If I may interject, I'm sorry, there is an echo, Laura.
Oh, okay. All right, thank you. I will try muting and we'll see if that can.
Okay, well, we'll move on, echo or not. So thank you, LCL, for bringing this program to the forefront. It's a very, very hot topic right now for anybody who is practicing law. So what I wanted to do first was I want to just kind of set the landscape to kind of tell you what's going on and what we see. And the slides, as we move through them, will tell you a pretty good story. But bottom line, the cyber claims have increased over 600%. And it's because everything is electronic now. The pandemic that everybody's been through has just thrown more fuel on that fire. And the claim frequency and severity, insurance companies look at how often claims happen, which is frequency, and the severity is how many dollars they actually cost them. So one of the biggest contributors to cyber claims is that technology is just ramping up at a pace that many people just can't keep up. And it's a huge challenge. Plus, there's a new technology out there that we've seen evidence of. It's ChatGPT, which is the AI chat software and technology that is becoming very prevalent and is very good at fooling people. So the top types of cyber claims that we see, ransomware, absolutely number one for claims. It's increased about 82%. The demand, average demand is about a little over $1 million. Second one was social engineering. That's phishing, and that represents 62% of cyber claims. And again, it has a significant increase over the past few years. Email compromise. That is the top target for funds transfer fraud, which we'll talk about more in a minute. That's the social engineering. That's really where a lot of the claims are happening. Employee negligence. This is an interesting one only because employees inadvertently open themselves to a cyber claim just because they're not paying attention to upgraded softwares, to clicking on things they shouldn't click on. So employee negligence is a proper, and just the last one is just kind of a general data breach. Again, all on the uptick for claims. So ransomware. Ransomware is defined as where somebody comes in and locks up your system, and they're holding you hostage or ransom. In the past, what they've done is they've just locked you up and said, listen, you have to pay us $50,000, $100,000, and we'll give you the code to open up your system. And what they've done now, there's a new trend where they're ramping up their activity by saying that, not only will we lock you up, but we've got a way to destroy all your data if you don't pay us what we want to get paid. Large firms are a target because they have more users, they have more systems, they have more data, they have more money. But what's interesting is that there's a new target that we're seeing emerging, which is the smaller firms of size 1 to 10, as an example. And the reason for that is that oftentimes they don't have the resources to keep up with the updates in cyber, the updates in technology, and that makes them a target. They don't necessarily have all the data that somebody wants, but again, think of ransomware as we're going to lock you up, and then you got to pay us to get back. Again, the top size targets are the 10 to 50. One of the things that really attracts people, hackers, to attack a firm is what they're doing. For example, if you do criminal work, for example, you're kind of low on their target. If you do a lot of commercial work, if you do a lot of real estate, you have money, and that's what they're after. Again, their objective has been they want to get paid to let you go, but now they're seeing that they want to destroy your data too. So social engineering. One of the interesting things that we've seen about social engineering claims, and that's the phishing, is that we've seen incidences where they've actually placed a virus in a law firm system and let it sit dormant until certain data points appear. It may be 3 months, maybe 6 months, maybe a year, and then it activates. So their main target to getting at your data is through your emails. The hackers get access a lot of times because they mine social media. They go into employees' social media accounts. They figure out how people use passwords, what they may use in the office. And they use that information to gain access to your systems. Email compromise. Real estate firms and business transaction firms are the prime targets for email compromise. Mainly, again, they have money. That's the fund transfer fraud that we see, especially in the real estate. You know, people are very anxious to get their money after a real estate transaction. People are busy, and oftentimes they just go ahead and wire the money. And honestly, it's about 100% preventable for fund transfer. We tell our clients, listen, call the number that you've spoken with the person before on, because hackers in the past have, and in the future have found a way to put a different phone number in, and you're actually calling the hacker. So if you going to wire funds, take that extra minute and actually place the call and verify the bank routing, verify the bank account, because if you don't, you can be spoofed and that money's going to be gone. So employee negligence. This is very common with people losing their laptops, smartphones, etc. People working at home. They don't keep up with the system updates. Their VPN is not secure. They open emails from places they shouldn't open them from. They visit unsecured websites. I mean, just take a walk around your office during the day and you may see people on sites that they really shouldn't be on. So the question I get on a very regular basis is, are cyber claims covered in a lawyer's professional liability policy? And the best answer is like a good legal answer, which is yes and no. Some policies cover third-party damages. Third-party damages are damages for someone else's property or someone else's system. Some policies cover first-party damages. First-party damages are damage to your system and your data. Some policies cover social engineering. Our policy covers social engineering. That's your funds transferred. What's really interesting and what I really caution people who ask me questions about their lawyer's policy is that your policies may appear to cover social engineering or cover some cyber work, but when you actually read the policy, and what happens is people read it and they say, oh, I got it. What they don't do is they don't read through the rest of the policy to see where that coverage is taken away. And that happens all the time. Oftentimes we see policies from our competitors where they provide a little bit of coverage. They'll give you like a 3-page policy, but when you read down and see what's capped, you may have $5,000, you may have $2,000, you may have $1,000 worth of damage. You think you have more than you should, but you don't. And some policies provide full limits for certain events, like funds transfer. So I'm not going to read this whole definition, but social engineering is the term that's tossed around. And essentially is fraud. Somebody's committed fraud. They've gotten money from you. They've got you to wire money, and you've been fooled or you've been spoofed. Social engineering fraud is defined as the intentional misleading of an insured through the use of a communication. That can be a phone call, that can be an email, that can be any number of ways. And essentially, they're telling you that they want to change the method of distribution, the destination, the account, any of those kind of things that are a material fact in that particular transaction. And you believe that those are true facts. So when you look at the definitions and how social engineering works and social engineering fraud is defined, you have to have those three components to make a valid claim. One of the things that we see, as I mentioned earlier, you think you may have coverage and you read all your policies and it says, I have it. But when you dig back into where the exclusions are, and people often ask me, how do I read this policy? And of course, everybody knows how easy these are to read, like your auto policy, your homeowner's policy. They're very easy to read. I'm just kidding. But you'll see oftentimes an exclusion that says false pretense. We're going to pay your claim unless it's subject to the false pretense exclusion. And you can read it, read what the definition, the common definition is for that. But essentially it says, we would pay a claim except if you get spoofed or fooled or phished or any of those kind of things. So we're not going to pay your claim. And that is much of a surprise to the policyholder that you can imagine. So another exclusion that pops up a lot of times is, again, it's a very long exclusion, and essentially it says the same kind of things. If you hold this money, it's in your care, custody, control, and you disperse it where you shouldn't, based on an information that you have, we're not going to pay your claim. And again, that's a real surprise. We've had instances where people have called us and said, listen, I have this question on social engineering and wire fraud. I just wired $600,000 and my carrier says it's not covered. Can you tell me why? My agent can't tell me why. Can you tell me why? Well, sure, it's not our policy, but we'll take a look at it. And the answer comes down to one of these two types of exclusions, which is, they would have paid it except that you got spoofed and you wired it where you shouldn't have wired. So you're going to pay it out of your own pocket. And they're not small numbers. You think of the cost of real estate, you think of the commercial transactions. As I said, we've seen many claims that are north of $500,000 that people are spoofed on. So a common exclusion that is driven by a technology failure. This is an exclusion on the lawyer's policy that's buried deep most times in the exclusion. Essentially, it says that this policy is not going to apply to any insured's failure to implement, update, or maintain commonly accepted technologies. So what they do then is they go through and they define what commonly accepted technologies mean. And it's a long, long definition, and people, have to read through it. But again, if you're reading your policy, which I'm sure a lot of people don't have the time to do, this commonly accepted technology is a very prominent exclusion. You look at firewall protection, you look at wireless encryption, you look at, password protection, you look at destruction protocol. I mean, you look at all the things. And again, a lot of times the insurance company's not there to pay a claim. They're there to find a way not to pay a claim. So when you look at these kind of technology exclusions, if you've got people working remotely and their home Wi-Fi doesn't have this kind of controls that you think they ought to have and that the policy thinks they ought to have, they're going to grab that one particular sentence or one particular definition and they're going to say, hey, you didn't keep up with commonly accepted technologies, so actually we're not going to pay your claim. So a lot of questions that we get on lawyers' policies as respects cyber. I probably get 3 or 4 calls a week from one of our insureds saying, my bank wants me to get a cyber policy. Now, cyber policies can get expensive. Average prices go from $2,000 to $10,000 to $20,000, depending on, again, your areas of practice, your size of your firm, your technology, et cetera, et cetera. But what banks 99% of the time are looking for is the social engineering coverage. They want to make sure that if they're doing a real estate transaction with you and that money gets wired someplace else, that they in fact are going to get paid if the money is taken by somebody else and you're spoofed. So one of the questions, if you get that request from the bank you do business with, is actually ask them, what are you really looking for? Are you looking for a full cyber policy, which, like I said, 99% of the time, they don't care whether you have certain kinds of other cyber coverage. They want to protect their money, and that's done through the social engineering piece. Another question we get all the time is, can I add cyber coverage to an existing lawyer's policy? And the answer is usually no. And insurance companies, having worked on their side for many, many years, they're very suspicious animals. And when you say, listen, I want to add cyber coverage, the first thing that pops into their mind is, I've got a claim. They're hiding a claim from me, or they have a potential claim they think maybe, so they better buy some coverage quickly. So most of the malpractice policies are written with what's called a retroactive date. What that says is that if you want a policy today, that's your retroactive date. They'll cover anything going forward, but nothing backwards. So can you add the coverage? Probably not. And the other question we get is a malpractice policy an adequate vehicle to cover my cyber exposures? Again, the good answer is yes or no. If you're doing low value transactions, but if you're doing some higher value transactions, malpractice policy is for covering your firm for if you happen to do have a malpractice claim. It's really not designed to be a cyber policy. There's pieces that are thrown in certain malpractice policies that cover the cyber, but honestly, that's not the place you want to buy your cyber coverage. So some of the things that are really good to have, and probably a minimal level of coverage, is you should have first-party coverage. First-party coverage covers direct losses to you, restoring your data. It'll cover ransomware. That's where your ransomware is found, is under first-party coverage. Oftentimes, if you have a data breach, you're required to notify all your customers. That's where that coverage is found. A lot of times you have to provide, service for the next 3 years to protect their credit rating or check their credit rating. So that's where all your first-party coverage comes from. Third party is if you cause damage to somebody else's through your negligence. You have to be negligent, but theft of information that belonged to someone else, damage to someone else's system, et cetera, et cetera. So there's first party, third party, and one of the things that the insurance companies look for is your exposure and your evaluation and what kind of corrective action you take. So oftentimes the insurer will ask for things like, show me your last security audit, show me your last password update list, show me what training you do for your staff, both in-house and remote, to prevent any kind of cyber claim. Things that a cyber policy should definitely cover. Customer notification. Again, you've seen all the hacks that go into, Target and other big retailers. I've got letters in the mail from several companies that do credit monitoring that say, there's been a breach in such and such a company. We're offering you, 1 year worth of coverage to protect your own credit rating. But you've got to tell your customers. There's a law that says if you have a breach, you've got to notify your customers. You should make sure that you have coverage for data breaches and recovery of your data. There are some really good specialists in this field And oftentimes, if you've got a ransomware or you've got a virus or you've got some way that your data is not accessed, you can't access it, these people will go in, and it's not cheap, but they'll be able to figure out how to get your data back. Systems damage repair. You should make sure that any policy you buy has coverage to repair the damage to your system. Again, not an inexpensive task. When you look at the cost of servers, you look at the cost of laptops, you look at the cost of any other remote technology, it's very, very expensive. Your policy should definitely cover ransom demands and also cover the demand to destroy your data. Ransom demands are very common. A lot of times they don't want your data. They're not after your bank accounts. They're after money, a quick hit to say, I need $50,000 and I'll give you the key and you can go back in and open up your system. The thing to think about though, is if you do file a claim for ransom and they do pay it, is to do your work to figure out how they got in, because what will happen is, and I've seen this happen several times, is once a ransom paid, that the firm doesn't go back and make any changes to their cybersecurity. 2 days later, they're back and they lock them up again. Want another $50,000. So not only is payment of the ransom important, but what's equally as important is to do some due diligence and find out where did it happen, how did it happen, and what changes do we need to make right now, because they'll be back. And then cyber attack remediation, that needs to be in there. Again, like all good insurance policies, all good insurance companies, they're going to have common exclusions on their policy. So things to look for are, is there an exclusion for human error? And they'll define human error in some nebulous term, but if human error is in there, they may not provide any coverage for you. If you knew that you had a previously vulnerable area and you ignored it, they're going to exclude the coverage. If you've got a disgruntled employee, they're going to go in and say, your employee initiated this attack, they sold your information, they did it themselves, they had a friend do it, so we're not going to cover that. Prior breaches. If the breach occurred prior to the effective date of the policy or the retroactive date, as I mentioned earlier, because this is claims-made insurance, it's not occurrence coverage. If it's done prior to those dates, they're going to say, listen, it's not our problem because it was prior to our policy. Acts of war, terrorism, that's a really hot one right now for exclusions, because you've got very, very broad definitions of what an act of war or terrorism is. If you've got a known group of terrorists who are hacking policies, the company's going to, employ their terrorism exclusion, and you're not going to have coverage. So make sure you understand how the company is defining acts of war, acts of terrorism. Make them give you some examples on what this means. Terrorism. How do you define terrorism? Can you give an example of how that works? They're also going to exclude your coverage if you have poor security, if you've got ineffective security processes, or you've got outdated information, outdated security codes, outdated servers, any of those kind of things. They're going to say, sorry, we're not going to pay a claim. Other exclusions are, Microsoft regularly sends out updates. So you need to update your systems. If you don't do it because you're too busy or you fall behind or whatever, the company's going to say, listen, you didn't keep your system up to date. Remember the exclusion we talked about earlier, which is the common technology exclusion. If you have employees who lose a laptop or lose a phone that has sensitive information on it, they can exclude coverage for that. If you don't report it in a timely manner, oftentimes the companies get a little cranky about this because they lose their ability to get at the incident early, to fix it, to investigate it, to defend it. And if they're 30 or 45 days in the process after you had the loss and you just didn't report it to them, or you didn't find out about it, they're going to say, sorry, we're not going to cover this. Misrepresentation or a non-disclosure on any insurance application, but particularly a cyber application. And they're fairly intense and fairly exhaustive to go through it. But if you misrepresent your systems, your controls, your training, your exposure, the work you do, any of those things, the company will say, you misrepresented, you didn't disclose it. We would not have written this policy had we known of the items that you misrepresented. And they'll exclude and not cover the claim. They're not going to cover, property damage, intellectual property. If you've got a certain amount of intellectual property that you own, they're not going to cover that, and nor are they going to cover the income that you would have generated. They're not going to cover if someone in your office is charged with committing a crime, so on a cyber attack. So again, I always tell people, listen, after you read the front page of your policy, which tells you the limits, the deductibles, go to the exclusions. Read the exclusions next, because that's exactly what they're not going to cover. They're telling you right up front, here's what we're not going to cover. And in those exclusions, they're going to have certain definitions. You go to that certain part of the policy that covers definitions, and you read exactly what they say. If you have any questions, you go back to the individual who sold you the policy and say, listen, I don't understand these exclusions. You need to explain them to me. Better yet, when you're looking to buy the cyber policy, make sure you ask very specifically upfront, what are the exclusions? What are the things you're not going to cover in this cyber policy you're offering me? So a couple of steps that you need to take to reduce your financial and business exposure to cyber laws. You need to really take a deep look at your staff. Take a deep look at your security systems. You need to make sure that your technology people have installed the most up-to-date technology, the right malware, all the back-end updating, all the things that you need to have done. And based on what on the previous ones I just spoke about, make sure that you've proven to the company that you're an insurable risk. Make sure you disclose everything. Make sure you don't hide anything. If you have any questions, make sure you ask the person who's selling you the policy, what do they mean by this specific question? Don't guess. If you guess, 99% of the time, you're going to be wrong if you make a guess. So people always ask me, how do they determine the premium? What do these things cost? And the very good answer, as usual, is it depends. The areas of industry that have a higher exposure, higher risk, places like healthcare, banks, people who handle sensitive data, if you in that kind of business, you're going to pay more than someone who doesn't do that. If on a size basis, if you have a lot more people and a lot more systems and a lot more devices, you're going to pay more simply because there's more exposure. And the other thing that I spoke on earlier is remote workers and geographic location of those remote workers. So they're going to look at how many people you have working remotely, how often do you work remotely, what controls have you installed for those people at home, who has access to their computers at home, et cetera, et cetera. That can change your premium up. They're also going to look at your revenue. If you have a lot of revenue, you are a higher risk because there's more to lose. The other thing that will cause the price to go up or down is, what's in the policy? What kind of limit do you have? What kind of deductible do you have? What kind of exclusions? All the issues that help them determine and rate their price. If you've had a previous cyber event, which, by the way, you're required to disclose, that's a guarantee of two things. One, if they write you, you're going to pay a higher premium. And secondly, they may not write you because they think you're too much of a risk to take. So some common mistakes that people make when they buy a cyber policy. They buy the cheapest policy. And that's the same for malpractice policies. The cheapest policy is definitely not the best policy, because 99 times out of 100, you don't get the coverage that you think you need. If you shop for a better price every year, companies, they do appreciate loyalty, and they don't need practice quoting your renewal and competing on your renewal every year. Once they write you, they'd like to keep you. If you think that all cyber policies are the same, like malpractice policies, they are not. They all have different definitions. They all have different exclusions. They all have different terms. So make sure the person who's selling you this policy can explain all these things to you and do some comparisons for you. Here's what company A is saying. Here's what company B is saying. Here's what company A charges. Here's what company B charges. So you get an understanding of the price versus the economic exposure to your firm. If you buy cyber insurance from people who aren't specialists, you're running the risk that you're going to have a claim because you don't have the coverage you need, and not because they're bad people. It's simply because they don't know. Cyber insurance is changing every day. Cyber changes, and it's got to do with the losses, the coverages, technology. If you trust somebody who's not a specialist, you're going to have a problem down the road. And lastly, if you buy from a company who's new to the marketplace, honestly, they don't have the right claim people yet. They don't have the policies where they want them. They're not really sure what they're covering. And so you need to buy from somebody who is in this business, has been in this business, has the experience to help you figure out what's the best way to protect your firm. So the priorities for why you need a cyber policy is you're protecting your business, and more importantly, your reputation. Any law firm's reputation is one of their most valuable assets. You need help in restoring your systems, getting your data back, paying a ransomware, helping determine what the cause of the event was. What are the costs they're going to help pay to notify your customers, et cetera, et cetera. So that's why you need cyber insurance. You're lawyers. You're not cyber experts. You're not insurance people. You need to rely on the people that really know what they're doing and how to do it the right way for your firm. You need to make sure when you buy these policies that you have defense for suits for those that are impacted, because oftentimes if you have a claim, they're going to come back and sue you. Ransomware we've talked about. A lot of the cyber companies will provide you some training manuals, training tools. How do you respond to an incident? How do you respond if you think you have a cyber claim? How to recognize those kind of things. And lastly, buying insurance policy, a cyber policy, you're transferring the risk. Insurance is a risk transfer. You take the risk you have, you transfer it to an insurance company. They're taking it and they're paying a claim based on the risk they've assumed. But the insurance is not a substitute for having a very comprehensive, very good security system, and make sure that you understand the policy language that you're buying and some of the events. So that's the speed version of cyber insurance. Is it on lawyers' malpractice policies? Why you should buy it, what you should do. So I guess now we open it up for any questions.
Harry, that was terrific. You have such vast knowledge on this topic, and you really gave us a lot of practical takeaways. Thank you so much. As I invite people to add more questions in the Q&A, we will turn to those in a moment. I just want to recap some of the many inside valuable tips that Harry gave us. So, for example, to really read your policy, to think about what are the exclusions if they aren't defined in the contract, to ask them, to think about whether you're getting first-party coverage and or third-party coverage, to recognize that while it used to be more 10 to 50 firms, attorney firms were targeted, even 1 to 20 firms are being targeted now. That with fund transfer fraud, such as real estate fraud, you can really avert a lot of it by calling. Oh, and I see, okay, I'm still echoing. All right, I'll turn it over to Lou for some more takeaways and then for some of the questions then.
I can handle that question, Laura. You still have an echo coming through? I don't know.
Yeah.
So let me go. Yes, okay. So let me go through the questions. Terry, thank you so much. This was an excellent presentation. A lot of good information out there for our audience. So let's go through 3 questions that we have. So the first one, I'm going to read it to you. It's a little bit lengthy. I like our professional liability policy with MBA Insurance Agency. I would love to buy our cyber policy through MBA Insurance, but last time I checked with them, they did not offer it. Why not? Why not create a cyber policy tailored to law firms, just like they do with professional liability insurance?
Well, the answer to that is there a little cyber coverage in our lawyer's policy? Yes, there is. Social engineering, as I said earlier, is the number one area, and we cover that at full policy limits. One of the reasons that we don't offer a specific cyber policy, although one of the things we've done is we partner with a cyber insurance specialist to have a comprehensive policy that's good for MBA members. The reason we don't do it ourselves is that it changes so fast. And in order to keep up with it, you need to dedicate 100% of your time to cyber changes, to coverage changes, to company behavior, to claims that are coming up. And our view is that it's better to partner with somebody who knows how to do this work. And we do the referrals out. So, anybody who needs a cyber policy and wants us to refer it, you could, my email's on the front slide. You can send me an email or you can call me, and I'll be happy to make that connection for you. We've already vetted these people to make sure that they know what they're doing. Their coverage is comprehensive. Their prices are competitive, and they're doing business with good companies. So that's really the reason why we don't have our own specific cyber policy.
Okay, and then we have a couple of questions about these slides, whether these slides or the presentation will be shared. It will. So once we have the recording available, we will share the slides with the audience and also some additional resources on cybersecurity. Then looks like the last question. What are recommended coverage limits for solo practitioners?
Again, the real good insurance and the good legal answer is it depends. Our recommendation is always buy as much as you can get and as much as you can afford, taking into account as to what your exposure is. As an example, if you do real estate transactions and you don't do anything that your funds are going to be more than $50,000, you may not want to buy a $5 million cyber policy. So again, one of the things that our specialists do is they can counsel you on what kind of limits and deductibles you should think about. And you as the consumer, you have two choices. You have an economic decision and you have a business decision. The economic decision is, what is really my risk for what I do, what I'm going to do. And the business decision is, what can I afford? And what kind of clients do I bring in that may expose me to a cyber risk claim? So there isn't one cookie cutter approach for limits or deductibles. It really is based on some of the things I talked about earlier, as the kind of work you do, what you can afford, really what do you need it to do for you. Solo practitioners have become more and more of a target, as I said earlier, and a lot of them is the ransomware. They become the new target for ransomware. And so you got to make sure that there's no cap, no low cap, no $5,000 cap on ransomware claims, that you should get the full limit of the policy or a significant limit that will respond to a ransomware claim.
Thank you so much, Terry, for this great presentation and great questions. Thank you for the audience for joining us in this presentation and for the questions. I had a kind of a follow-up question, Terry. If
Sure.
You could expand a little bit on the training tools that are available for attorneys who buy cyber insurance through any policy or
Sure.
carrier. What can you tell us a little bit more about that?
Yeah. Again, it depends on the company. The company will apply resources depending on the risk they look at. So if you're a large firm and you do a lot of commercial or real estate transaction, they're not going to give you a book and say, here, take a look at this and figure out what your exposures are. Oftentimes they have training modules for online training. They have in-person training depending on the size.
Mm-hmm.
They have self-tutorial ones that you can go through. They have conversations with your IT person before they write the policy. So again, it depends on the risk you present, the exposure you present, the type of coverage you're actually looking for to have those kind of training modules. But, you know, they're kind of all over the gamut, soup to nuts. It just depends on who you are and what you do.
Thank you so much for that. I see a question asking for your email and telephone number. I'm just gonna read it from your first slide, Terry.
Yeah.
Let me see. Actually, it's not, your email is not in the first page. I apologize. I thought it was there.
Yeah, my email address is twelsh, TWELSH, at massbar, massbar.org, O-R-G. And you can reach me at 617-338-0595. And that's, you know, professional liability or for the cyber coverage. I talk to people all week long who aren't our clients, but they have a question. They're an MBA member and they have a question on the malpractice policy, for example, that they bought. They're confused. They're not sure what coverage they have. And I talk to them all the time because you're a member and that's the service that you deserve.
Thank you. Thank you so much. And as a reminder, if you would like to follow up with us as well in terms of getting some guidance on law practice management issues, you can always schedule a free consultation with us. You can go to lclma.org and schedule consult with Laura or me or both. And we can discuss any further questions that you have on cyber insurance or cybersecurity, since October is Cybersecurity Month. Having said that and not hearing any further questions, I would like to thank again Terry Welsh for this excellent presentation. And thank you everyone for joining us.
Thank you.
Thank you. Have a good day.
Yep. Thank you.
Okay, bye-bye.
Thank you so much, Luz and Terry. And thank you to the audience at Echo. We look forward to having you join us next month. A webinar for busy lawyers will be regarding loneliness with law clinician Dr. Sean Healy. Thank you again, Terry, and everyone here today.
Bye-bye. Thank you.
Bye.